Welcome to TradeTheMBI.com. This is John. This report is for the 17th, and we're looking at the S&P right here. And yesterday, that was Friday, given the start of the week. We did come back and fill the positive extremes I was talking about from Friday's video, and then as soon as that happened in pre-market, there was just buying all the way through. You're stuck in the situation where else is the market going to put its money? They're not going to go into treasuries, and we'll show why, because that's just becoming a ridiculous configuration. And it's a strange one because the expectation is they're pricing in nearly zero rates. It's insane. Um, so that leaves you in an interesting situation. The difference is that you have a lot of S&P stocks that have suffered significant declines, but the fact you have these just few high flyers, your Nvidias, your Apples, they're weighted heavier and their increases are reflecting. So you end up with this crowded trade where just a few stocks are really keeping things elevated. Now, yes, certainly you could say if those come down, then the market will fade, but will it? Because at that point, you've got all the other stocks that have been beaten down that they'll start to get the trade, and so you'll still relatively keep most of the gains that you've acquired. But from a reflex standpoint, we're down at 2.5 from a short standpoint here on the NBI white. Uh, you know, those levels, you're going to get some kind of pop, and when it does, that's when you see a little bit of softness. So it's just something to be aware of going forward. When we look at the NASDAQ, this is that clear indication, much stronger, big numbers here. And then, of course, cyan on the DOC below, red, always buy configuration. The potential concern here is the DOC dips below negative 13, but the fact that it's coming from underneath, even any dip would be short-lived. So you go back here into December and you can see when you get a DOC dips, you get a little bit of a pullback, but the fact is then you've reset your steel, which is short-term buyers, and it just sets them back up to turn it around. So worth noting. And that's when we get into the discussion of what's going on in the bond market, and that's I mean we're back to where we were at March when they were expecting 7 rate cuts plus. Does anyone see that happening? Given what we're seeing from the numbers they're reporting, no possible justification. I think the expectation is that they just think the Fed is going to do it anyway because of the election. No matter what, they're going to cut regardless of what the data says. So, and of course, the more lenient numbers coming from the inflation. It doesn't solve inflation. It just means that it is growing at a slower pace. Oil isn't collapsing by any stretch of the imagination, so fine, but not all that helpful. So, but we always get these periods of irrationality. I mean, you look at the euro, how irrational that move was, rising on the expectation of the ECB cutting rates. All right, well, you cut rates. Why do you want to be in a euro? No possible reason. The benefit to the euro was when oil prices were dropping and they have to spend fewer euros to transfer into dollars to buy oil. Well, that's not the case anymore. And if oil continues to rise, then the euro should literally break those lows. In fact, it's already still elevated to where it is. Most of what you're seeing from a euro collapse is lack of confidence because you can see that across all of Europe, this liberal notion of heading towards war with Russia and that not very popular, and they got all those groups promoting support of Ukraine that got pummeled, uh, which says something about the discontent that exists. And you have massive protests in every European country over farming regulations and this move towards zero emissions, everything, with no infrastructure to back it up. So, people are realizing some of the insanity policies, and they're just fed up with it. So, and that from a gold standpoint, holding flat here at the baseline, but again, it's going to get a second run, particularly when oil continues to make its move. And the further you restrict ability to get new oil, that's going to cause the whole same thing over again. Hasn't led to any improvement from Bitcoin or crypto because we're in this pause where it's still better to be in the market because that's where the movement is. Everywhere else is sort of lagging. ETH did a bit better. And again, it's just going to be this back and forth. You can see that slight turnaround, moving more towards an ETH on a positive push, so you could see some disparity between them. When we look at it from our 50K, we were talking about this spike when I was doing the report for Friday, and sure enough, as soon as that dip there signaled it, this happened in the pre-market, and that was a pretty significant decline because we were talking about these positive extremes down here on the extreme histogram that needed to be filled, and that was pretty much coming down to right in the lows in this range. Didn't quite get there. I expected a 50% move. We actually did further than that, which is more than 80% of that initial bracket move, which to me that's a full fill of positive extremes. And of course, the market agreed because that's exactly why they do it. And continued to rise all the way through the end of the day, and it was pretty strong from a turnaround there. As soon as magenta came back, it had stabilized, and once you had the blue over the gray right in the middle of the day, it started off right here and then just proceeded all the way back up to its highs for the day. And so this was the pre-market decline that we were talking about, and then it started to build up right as the cash opened, and from there it was just pretty much boring, straight up. There wasn't a whole lot of trade there. It was just boom, and a brief little fill back, but nothing special. And here in post market, it's been pretty much sideways action, a little bit of fill back and forth. We're now on a new tear, so that puts green in the pre-market. That's the long and the short of it to start the week. I think it'll be an interesting one. We'll have some more data come through, and how much of that we're going to rely doesn't really matter. It's how the market perceives it, and perception is everything in the market at this particular stage. That's the long and the short of it, and I will update anything relevant on the Skype chat. Have a good one. Trade well.